Last month, I added capital to 2 already existing positions in my dividend portfolio, and you can see my portfolio has been performing pretty well as of late. I'm up around 8.53%, and the S&P 500 performed pretty good last month as well. You can see it's up around 1.39% over the last 28 days. Now, with that being said, I still think there are opportunities to buy great companies at discounted prices in this market. So in this video, I'm going to be going over the 2 positions I added capital to in my portfolio, and we'll be analyzing both of these companies. So let's go ahead and jump into it. And the first company we're going to be looking at is Bank of America, stock ticker BAC. You can see they're currently trading at $29.06 per share. Over the past year, they are down almost 20%. Over the past 6 months, again, down almost 20%. And over the past month, up around 0.83%. Now, this company has a decent starting dividend yield right at 3% right here. And you can see a pretty good history of increasing their dividends. They have 9 consecutive years with dividend growth and a really good 5-year dividend growth rate of almost 15%. So for me personally, that checks a lot of boxes: a decent starting dividend yield, really good dividend growth rate, and a commitment to increasing dividends, as we can see with the 9-year growth rate. So let's go ahead and jump into my spreadsheet to see if we can analyze Bank of America. And this is actually a spreadsheet that's a little bit different than my traditional stock screener spreadsheet. This one is specifically designed to value financial stocks. So again, depending on the stock ticker you plug in right here, you can see all this data is going to load in. So I'll plug in BAC and hit enter. And like always, if you'd like to be able to download the spreadsheet, you can head over to my Patreon page at the link in the description. And again, like we already mentioned, decent starting dividend yield, payout ratio only sitting at 26.8%. So yes, a very nice low payout ratio. That's a great sign. Plenty of room to continue to grow the business while growing dividends. We can see 20-day moving average up slightly, but the 50 and 200-day moving average both down quite a bit. If we come down here, we can see analysts currently have a target price of $36.54, institutional ownership around 71%, and a beta of 1.36. So you're actually going to see quite a bit of volatility with this stock. Now let's go ahead and jump into our first valuation model, which will be Graham's valuation. And you can see the variables we need to plug into this formula right here. We have our earnings per share, our growth rate projection, which really isn't too high for Bank of America, and then we divide all of that by Y, which is the current yield on AAA corporate bonds. And once we plug all of this in, we come to an intrinsic value of $36.86, which is actually pretty close to what we got for analyst target price. Now moving forward, we're going to look at the historical price to tangible book value. If you are valuing a financial stock, I think this is an extremely important metric to look at, because basically you're going to be able to see what it's worth and how it's been trading compared to where it's been historically. So you can see from 2012 to 2021, we can see the share price and the tangible book value per share right here. And then we can see, once we divide the share price by tangible book value, we can see the historical price to tangible book value. So looks like it's been trending upwards, as we can see from this chart. You want to see a lower price to tangible book value in the banks that you're buying. And right now, the current price to tangible book value for Bank of America is sitting at 1.27. So it's quite a bit lower than it has been over the past 4 to 5 years, which is a great sign. It means the company is trading at a better value compared to what its current trading price is. And if we jump back over to Seeking Alpha and come up here and click on valuation, we can see that the price to book value for trailing 12 months and the forward-looking price to book value both under 1, which is a huge sign to me, because Warren Buffett has stated before in interviews that he looks to buy bank stocks when their price to book value is below 1. So again, Bank of America checks that box indeed as well. Let's go ahead and jump back over to our spreadsheet and look at our multiples valuation. We'll come up here and zoom in a little bit more, and you can see our comparable companies, nothing too crazy, JP Morgan and Wells Fargo. We're taking their stock price, dividing by the earnings per share to get the price to earnings multiple, take the average price to earnings, multiply it by the earnings per share for Bank of America, and we come to an intrinsic value again of right at $36 per share. So far, $36 seems to be pretty consistent with Graham's valuation and the analyst's target price. Now, when you perform a multiples valuation with these companies, something I typically like to check as well is going to be the ROA of these companies and the comparable companies. That's something you can do pretty easily. You come back over to Seeking Alpha and click on the peers. And if we scroll down and get to the profitability tab, we should be able to see the return on assets. And here we are. We can see Bank of America return on assets 1.34%. That's pretty decent for a bank. You can see Wells Fargo a little bit higher, But compared to these other companies that we're comparing them to, it looks like they're doing pretty decent when it comes to their ROA. Again, which makes me think that they may be undervalued since their price to earnings, if we jump over to our stock screener, you can see right here, 8.77, a little bit lower than those comparable companies. Now, the last valuation we'll look at is the dividend discount model. And this values a company based on how much they increase their dividends by and what their current dividend payout is. So I plugged in the current quarterly dividend payouts and the historical dividend payouts so we can see how much they pay out each year, and this allows us to see our year-over-year dividend growth rates. Once we have that, I project a growth rate of around 6%, discount rate of 9%, and we come to a dividend discount model price per share of $31.09. So when we jump over to our output tab, we can see the three valuations that we used here, as well as our current price to tangible book value, which I think is a pretty good number compared to where it's been over the past decade. When we average these three valuations together, we come to an intrinsic value of around $34.65. Now, the current trading price for the company is around $29 per share. I actually added capital when it was around $28 per share, but let's say we add a 10% margin of safety. You can see based upon that, our acceptable buy price for this company is around $31.19. If you had a 20% margin of safety, your acceptable buy price is much closer to the price I paid, around $28 per share. It's $27.72. So again, not quite in that buy range at the moment at its current trading price with a 20% margin of safety, but it is still very close. Now, the second company that I added capital to this past month is Texas Instruments Incorporated. You can see they're currently trading at $166.72 per share. I added capital at around $162, and they actually took quite a dip this past month, down 10.12%. Let's go ahead and jump over to the dividend tab and dig into this a little bit. And again, you're going to see a similar story to that of Bank of America. Good starting dividend yield right at 3%. Really good 5-year dividend growth rate at 16.37%, and a dividend growth history of 17 consecutive years. So again, all three of those boxes definitely get a check mark. It's looking very good from a dividend standpoint. So let's go ahead and jump into the valuation spreadsheet. You can see I've already plugged in the stock ticker here. Payout ratio currently sitting around 53.10%. So ideally, I'd like to see it a little bit lower, but I don't necessarily think it's a red flag. I don't see any problems with it. 20, 50, and 200-day moving averages all down now. Analysts currently have a target price of $181 per share. Institutional ownership very high at 86.7%, and a beta of just a little above 1, so you may see a little more volatility than normal, but nothing too crazy. Let's go ahead and jump into our first valuation, Graham's valuation. Again, we'll plug in all these variables into this formula, like our earnings per share, growth rate projection, pretty high at around 11, and the current yield on AAA corporate bonds at the time of this video, 4.36, and we come to an intrinsic value of $166.03 per share. Now, moving forward and looking at our discounted cash flow analysis, you can see I plugged in the historical free cash flow for this company, so we can see our year-over-year growth rates. Average growth rate of around 7.25%. Now, moving forward, I'm actually staying closer to in line with analyst expectations of 11%. So I projected that to the future free cash flows for the company and the terminal value, which is the sum of the future free cash flows past the year 2030. I then took the present value of those future free cash flows and added them together, added their cash and cash equivalents, and subtracted out their total debt to get their equity value. Once I had that, I divided by shares outstanding and came to a discounted cash flow price per share of $192.45. Moving forward, we will look at our multiples valuations, and we have a lot of great comparables for Texas Instruments. We're taking the stock price dividing by the earnings per share to get the price to earnings multiple, and you can see we have quite a few outliers here. It fluctuates quite a bit, but the average price to earnings is around 20.24, and when you multiply that by Texas Instruments earnings per share, we come to an intrinsic value of $180.41. Now, the last valuation we'll look at is the dividend discount model. Again, I've already explained how this works, but basically it values a company based on how much you pay out in dividends and how much that dividend is increasing, and you can see really good dividend growth rates of close to 17%, 13.33, 12.75, and close to 8%. So that's an average growth rate of around 12.7. Moving forward, I'm projecting a dividend growth rate of 6.5, discount rate of 9, and that gives us an intrinsic value of $211.30 per share. So when we jump over to our output tab and take our four valuations, we come to an intrinsic value of around $187.85. $1.53. So with a 10% margin of safety, you can see our acceptable buy price is around $168 per share, fairly close to where I bought in at around $162 per share. With a 20% margin of safety, your acceptable buy price is around $150 per share. This is a company that had been on my watch list for quite some time. Obviously, I had already invested some capital into it, and I have seen some gains, but I wanted to add more capital to this position because I really believe in them long term and believe in their ability to continue to increase the amount they pay out in dividends over time. And if we jump over to my dividend dashboard, I'll zoom in here, and you can see exactly how much each of these positions is paying me in dividend income. We have Bank of America right now. It's not a whole lot. It's around $13.20 annually. And then Texas Instruments around $45.14 annually. So neither one of them are super large positions in my portfolio, but I was excited to be able to add a little more at what I felt like are good prices. These are companies with a solid starting dividend yield, good history of dividend growth, and I believe they have a commitment to continue to increase the dividends they pay out over time. So there you go. Those are the two companies that I added to my dividend portfolio last month, and a quick analysis on them. Go ahead and let me know what you think. If you'd like to be able to download this spreadsheet or any of my other spreadsheets, you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.